Aaron Tattersall here with another episode of At the Table with AgRisk Advisors, where we discuss timely and relevant issues challenging the ranchers and farmers we serve every day. You'll be hearing from industry experts and our advisors as we examine risk management programs to protect your legacy.
Well, thanks everybody for tuning in today. It's Alex and Anaya here with AgRisk Advisors. I'm here with one of our most senior agents, Tait Berlier. How's it going, Tait?
Excellent. Nice
Awesome.
rainy day.
Yeah, well, I mean, you had kind of a long drive all the way over here, didn't you?
A little bit.
Yeah, down south. Where are you at, Louisiana now?
Mm-hmm.
All right, sweet. That's what I'm liking to hear. So it sounds like today, guys, really what we want to kind of discuss is a little bit about beginning farmer and rancher and veteran farmer and rancher through USDA federal crop insurance. Is that kind of what we're hitting on?
Yeah, that's a subject, and there are differences between what people are familiar with at FSA and the BFR and VFR benefits through federal crop insurance. So I think that's probably what we'll discuss a little bit today, is just so people are clear on those, and then make sure that they're aware of how they can access those benefits and how to get in touch with us with any questions.
Yeah, absolutely. I think that's pretty solid. So I guess why don't we start out with kind of what are we talking about? What is a beginning farmer and rancher, and what's a veteran farmer and rancher? How does this really apply to, our individuals and our producers through federal crop insurance?
Well, generally, beginning farmer and rancher is somebody that has, depending upon whether you're at discussing crop insurance or visiting with FSA personnel, is either someone with 5 or less than 10 years of farming experience. And a veteran farmer or rancher, of course, is someone that has served in our military. And both of those folks, just like everybody else, are going to have a really difficult time in today's day and age starting a new farming or ranching operation. And USDA wanted to make sure that there was something extra available for them to give them a leg up and try and enter the industry if they so choose.
Yeah, no, I think you hit that perfect. I mean, just like you said, today's day and age, it's almost nearly impossible for someone to come in unless you inherited a ranch or inherited a farm. You've got the acreage that's available for you. The land isn't readily available, and things are just very expensive now. So through some of these programs, I think, beginning farmer rancher and veteran farmer and rancher make it a heck of a lot easier to participate in some of these programs, be able to utilize them at a little bit bigger of a discount, and then kind of take into consideration too, with the banks, with loans, a lot of individuals are actually going to appreciate having these types of programs with the increased subsidy rates, and the banks are going to like it a little bit more too.
Oh, absolutely. Anytime you can manage your risk and do it at a reduced cost, that's good for everybody.
I think one of the big differences too on, beginning farmer rancher and everything like that is once you kind of get into crop insurance, you've got beginning farmer and rancher, and then you also have, first-time farmer, right? Through multi-peril crop, what is a first-time farmer? How does that apply to, and how is that different versus a beginning farmer and rancher? And I think one of the biggest differences is you could be a first-time farmer for that county for whatever piece of ground or whatever crop that you are farming in that area versus, a beginning farmer and rancher has to meet that minimum history requirement of 5 years or less.
Yeah, you're referring to the new producer rule under multi-peril crop insurance, and that allows anyone who hasn't produced a crop in that county for 2 or more years to receive an additional bump to the T yield, and there's obviously advantages to that.
Awesome. Yeah, definitely. So, I mean, with beginning farmer and rancher, what's our biggest benefit to that? I mean, is there, as far as the qualifications go, but there's that subsidy increase. I think is it 10%? Is that right?
It's an additional 10% subsidy, which is probably the biggest single advantage to qualifying for BFR or VFR benefits. However, depending upon your involvement in the previous operation, your ability to bring experience and your actual production history forward from an operation that you were previously involved in may also be the biggest single advantage because you're not starting off with the county yields. You could be starting off with something better.
Yeah, definitely. I think it's pretty cool. I mean, I recently just kind of ran into a situation with one of my producers. It's an entire family, a mom, dad, and their children, and we're kind of getting them signed up with the livestock risk protection program. Come to find out, the boys have their own entity, and one boy is still in college, and the other son, he's recently fresh out of college. They're both in their early 20s, and kind of starting out with their own portion of the operation, want to grow it and provide into and lean into that generational standpoint, but also try to do things on their own. What I actually ended up learning, and I thought was one of the coolest things too, is that if they're still in college or if they were a minor at the time, you can exempt those years of history, even if they were producing livestock or crops or anything else during that period of time. So one brother is still in college, and he's in college till next year, even though he's got 2 years of history behind him. Since he falls in the exemption category, we can actually exempt that out. So once he gets out of college, he starts that 5-year mark as year one. And I thought that was actually one of the most beneficial deals too, because whether you're a minor under 18 or whether you're still in college or continuing your education or on the VFR status, if you're an active military veteran or active military, excuse me, you can actually eliminate those years as an exemption and kind of help yourself, continue on a little bit more. So,
Yeah, exactly. It understands that there are things that could be major life changes where you're not directly involved day to day in a farm that you have an interest in. And so, I think that the rules are written generally to try and understand the different sort of seasons of life and things that might come up where a person might be disengaged from farming for a while, but still not lose those benefits.
Yeah, definitely. I think another big point too that we kind of have to make known, and this is something that everybody almost asks a question to when you start talking about beginning farmer and rancher is, if my son's part of the entity, can we still qualify and get the extra 10%? I think that's, a really big question that people need to understand. And, since the dad, might have 10, 12, 15 years, he doesn't qualify anymore. Everybody in that entity has to qualify for beginning farmer and rancher. And, I think that's a fair standpoint as far as everything goes. You kind of have the experience necessary and you're not solely on your own. So it kind of makes sense to me. What are your thoughts on that?
No, that makes sense. And of course, it's designed to help keep people from bringing people into the operation that are younger that might just be good hands and putting them on the policy in order to receive those benefits when in actuality the ranch or the farm has plenty of experience as far as the operators and so would not qualify. So that makes sense to me, and it's sometimes a little bit of a bummer to find that out, but the rule's there for a reason.
Yeah, definitely. And I don't know. I get real excited when I start talking with like a beginning farmer and rancher. It's someone who's wanting to further being part of the agricultural industry, see kind of what they can do, for themselves, for their family, how they can help feed America. And that's one of the biggest things for this is let's take this advantage and let's utilize it to that producer's, well-being and help them succeed in some of these different risk management programs. And I think that's, freaking awesome, man.
Well, and the same thing kind of applies also with the VFR, the veteran farmer status. The everyone in the business, generally speaking, must have a veteran status in order to receive those additional benefits, such as the increased subsidy.
So, and with the veteran farmer, is that the same type of deal? Is it 5 years or less, or how does that work on the veteran side versus a beginning farmer?
That's correct. 5 years or less of insurable interest.
Awesome. Cool. Man, that's such a huge advantage for guys. And, to make things even better too, where I'm at in Southern Colorado, I was kind of on this podcast a little bit before talking about the whole farm revenue protection program and being in Pueblo, being in Southern Colorado, it's a lot of specialty crop producers. And what's even better about this on the specialty side and through whole farm is you're actually 10 years or less in history on whole farm, and you can guarantee that beginning farmer and rancher status. And I think that's a really important part for people to kind of help and understand too, because at the end of the day, these programs are there for a reason. If we can extend it for a program like whole farm, then, that's pretty amazing.
Yeah, I think that's a major flexibility that is unique to whole farm under federal crop insurance, is that, like Alex said, it's a 10-year window for being considered a beginning farmer or rancher with that policy, with coverage through that policy. Everything else you drop off at 5 years. But a lot of that is kind of geared around the idea of trying to make whole farm the general policy, whether it's micro farm or whole farm, more flexible and easier for people who are beginning to access. That kind of brings me back to something that I said earlier, which was an insurable interest. And the crop itself does not actually have to be insurable in order for you to have an insurable interest. And so, for example, if you're raising chickens in your county, but that's not something that coverage is available for under multi-peril crop insurance, then that, although it would be under whole farm, that's something that even though you didn't have insurance and it was not insurable, you had an insurable interest in the outcome of that operation, and so therefore that starts the clock on BFR or VFR. So there's kind of an important distinction to be made as far as what's insurable, and really it just boils down to pretty much everything that you may raise or grow, even if it's not insurable, you have an interest in it. That is going to start the clock on your experience as it relates to beginning farmer and rancher status.
And I'm glad you're here. This is why we brought the big boys and the veterans in, is so we can kind of understand a little bit better as far as get some examples out to some of these guys. I think that's a really big, portion of this, and we can talk all that we want, but how does it apply to real world situations? And so I think that's pretty awesome as far as kind of how things can go. What else we got on beginning farmer and rancher? What else can we utilize that for? I guess, is there any, outside of the 5-year qualifications, we keep talking about these subsidy limits and these subsidy increases, 10%, I think we should probably talk a little bit about what that means. I mean, maybe people don't really know what the subsidy is or how that applies. Why don't we talk a little bit about that?
Yeah, so the federal crop insurance premium subsidy is something that applies for those products where a subsidy is available. And it's on a producer level. So essentially the policyholder, depending upon their qualifications that they may have, such as BFR or VFR, may be eligible for additional subsidies, premium subsidies that are paid on their behalf. So typically in federal crop insurance, if the premium cost is $100 and it's a 50% subsidy, the producer is only going to pay $50 of that premium out of their pocket, and the other $50 is paid on their behalf by the risk management agency. And so in the case of BFR and VFR, the example that I just gave, if the premium was $100, that extra 10% subsidy would result in the producer's premium being just $40 instead of $50, and the RMA paying $60 instead of $50 on the producer's behalf. So that's how the premium subsidy is actually applied, and it depends again on the crop and the county and the producer status as to whether those actually do apply.
Dude, that could be huge. I mean, we're talking, for examples and easy math purposes. I know I need that. I need a calculator for most things, but I mean, if most things in crop insurance aren't $100, right? We're talking, a couple $1,000 here, $1,000 there, depending on how many acres, depending on the program that we're involved in. So that extra 10% can go a long way, in my opinion, for different producers, especially becoming in, not having, the equity that maybe a longtime rancher would have, or a fifth generational rancher or farmer would have too. So, I mean, that extra 10%, even though this example was $10, 10% goes a long way.
Yeah, it does. And crop insurance, of course, is already pretty producer-friendly as far as the risk management agency understands that they need to fit a budget. And at some point, it just becomes, despite how much risk they may have out there, if things become too expensive, it's not something that's going to be participated in very often. So the premiums need to be attractive, and then with that said, the folks that need an initial leg up, such as beginning farmers and ranchers and veterans, that extra 10% can certainly help grease the wheels and keep things moving.
Absolutely, and that's pretty awesome. My biggest question, and a lot of times that somebody comes in and asks me is, we deal with the farm service agencies, the FSA offices, and things like that, and What I still struggle every now and then is to help them understand, the true differences between beginning farmer and rancher status through federal crop insurance and USDA and the Farm Service Agency. And I think one of the biggest things to know is that since these are, separate sides and separate branches of the USDA, there's separate rules and regulations that apply to these different programs. Like with the Farm Service Agency, they can qualify up to 10 years, but it's for FSA programs in general and how they can help, generate different items for their loans and things like that. But through federal crop insurance and the different rules and regulations, what it's applied to on the additional subsidy, they only get that 5-year mark. So I think that's kind of big for new people to understand a little bit.
Yeah, it's important to understand and important to make sure that those questions are asked at the beginning when a relationship between an agent and an insured is being formed, because that way you're not going to miss out on any benefits that do have a relatively short window under most plans of insurance with the risk management agency. So yeah, it's a tremendous benefit, but producers need to be aware of the differences and the things that they hear at the Farm Service Agency that are almost certainly accurate are not accurate across the board for the risk management agency and their programs. And so even though it's all under USDA, like you said, it's important to understand that your qualification at FSA is different than your qualification for premium subsidies with the risk management agency. And in some cases, the FSA is actually more stringent. There are size limitations and acreage limitations on your farm as it relates to the average county farm size and some other things that don't there are bars that you don't need to clear to receive the additional subsidy for RMA. So they are different, but as long as you have a strong relationship with your Farm Service Agency office and your crop insurance agent, then you should be able to navigate them pretty easily.
Yeah, absolutely. I think that's an important part, and that word that you keep using is relationship, and that's a lot what I think we do here. We try to educate as many people as possible and our producers as possible, which is kind of what we're doing here today. But having that strong relationship kind of helps our producers really understand that we want what's best for them and we want to help them succeed. And so being able to ask those questions that are a little bit more in depth can lead to, oh man, you can actually qualify for beginning farmer and rancher. That's a conversation topic we need to have right now. Let's kind of dive into that a little bit. And maybe this is something that makes this program even more attractive to you, even though it already was at the start. So I think that relationship portion is a really, really big hit that we here at AgRisk really try to do and implement into, everything that we do when we talk to our producers.
Yeah, it's this is not easy stuff. I mean, everybody is. All of our producers are extremely busy, and they have a lot on their plate. Managing their risk is just one of those, and it's important to us that we have the kind of relationship where they trust us to know that we're giving them the right advice and acting in their best interests. So, yeah, it's important to have like you said, a relationship with a professional, and that's kind of what we are.
Yeah, so with your producers and the people that you work with right now, do you have anybody that's a beginning farmer and rancher that qualifies or has qualified in the past? Have you worked with anybody like that?
Yeah, certainly.
What did they need to do, I guess, to kind of get started with that? What did you have to talk with them about? What did they have to provide over to you? What did they have to do to actually qualify for that option?
It's an application, and generally it's just a matter of understanding what years crops and livestock were raised, or what years the applicant was involved in the production and had a financial interest in any crops and livestock. And so it's just a little bit of a conversation to determine that history. If they're already set up at FSA, you can pretty much take that information and put it on the crop insurance application. It's largely the same information, and so if it's it's very possible that for most beginning farmers and ranchers that if they have already been into the FSA office, they're familiar with the line of questioning and the information that they need to provide.
Yeah, I think, and we'll try to make it as easy and painless as possible for you guys too. And from what I've seen is in most underwriters and most AIPs, the application's 1 or 2 pages long. So it's just filling out a couple boxes, making sure we cross our T's and dot our I's, and get a signature on that bad boy so we can submit that over and get that extra 10%. I think that's really going to help out in the future.
Yeah, yeah, and there's differences too between we keep talking about beginning farmer and rancher, but there are differences between beginning farmer and rancher and veteran farmer and rancher. They're lumped kind of under the same group of benefits that are provided, but there are some ins and outs as far as small things that a producer needs to be aware of, and there are things like exclusion of crop years, I guess, is one thing that I'm thinking of. A beginning farmer and rancher can exclude crop years, and a veteran farmer and rancher can't. That's just one thing that is different, kind of like the qualifications. Of course, you've got to have documentation of active military service, and then they'll notify if you qualify. So there's some differences, but by and large, the things that it conveys, which is the additional 10% subsidy, the opportunity to utilize a previous producer's production history if you were involved in that operation, a substitution of the T yield. So we talked briefly about the new producer status, which gets you 100% of the county T if you have not produced that crop in that county for more than 2 years. As a beginning farmer and rancher, even if you potentially have, so you let's say you could have BFR status being 3 years into your 5-year window of receiving the additional subsidy and the additional benefits from that status, you could have you would not be eligible then for the new producer T yield substitution. However, VFR gets a bump from 60% to 80% of the county T yield for the crop in that county. So if you had a wreck your first couple of years out, and you were leaning on the fact that the new producer status was plugging your yields with 100% of the county T, then this BFR and VFR is going to come in very helpful in that 3rd, 4th, and 5th year, because you'll still be able to get 80% of the county T if you haven't already been growing more than that. So there's, with the production history and the increases in T yield, wrap that together with the 10% additional subsidy, and it's there's a lot of benefits to making sure that you are signed up for this and have the application in if you qualify.
So it's a win-win, I mean, for new guys. There should be no reason why we shouldn't be getting y'all signed up as a beginning farmer and rancher, as long as you meet the qualifications, to make sure we can really help you out. I think another point that we really need to stress and make is we're talking subsidies, we're talking additional 10%, but what we haven't really, mentioned yet is the conservation compliance option for that. I know I've ran into it a couple of times to where, an individual signs up and gets qualified for beginning farmer and rancher. We know they're going to qualify, but they haven't filled out an AD 1026 conservation compliance form through their farm service agency. And so until they do that, until they're conservation compliant, they're not going to get the subsidy. If they don't get the subsidy, they're not going to qualify for beginning farmer and rancher. So it's a big deal to stress whether, even if you're a new producer, maybe if you haven't, done any type of crop insurance before, we can get you an exemption form for 1 year. And that gives you basically a few months to go to the FSA, get set up, and kind of at least introduce yourself to that office. You're going to be very familiar with it, whether you work within different programs or if you got to go certify your acres, however it might be. But that's a really, really crucial aspect that these guys need to understand formally. So that was something that I was thinking about. I'm glad you brought it up because it ties back in with explaining how the subsidy is applied. It's theoretically anyone can sign up for crop insurance that may not meet a number of qualifications, and they can receive coverage. However, they will not receive the subsidy, which of course is one of the things that really makes the coverage attractive and cost effective in many cases. And so that
just like I said, goes back to and ties in with how the subsidy is applied. It's kind of anyone can have a policy. Now it's like, let's see what things you qualify for that are going to get you that are actually going to get you the subsidy and make it cost effective.
Yeah, no, most definitely, man. Well, in my opinion, I think BFR and VFR is something that we need to really stress to all of our producers. I think if you're out there listening right now and this is something that you guys qualify for, you have more questions on, my goodness, reach out to us. Give us a phone call. If you're working with an AgRisk advisor already, reach out to them. If you're working with Tait right now, you probably got a leg up on almost anybody. Like I said, the dude's a veteran. And we're having a good time. I think me and him are doing pretty well at this right now. I don't know about you. Is this your first time doing this podcast?
It's the first time, and I think we're doing great.
Yeah.
Thanks to you.
So, well, guys, I don't know. Tait, do you have anything else on VFR, man?
No, I don't think so. I think you nailed it. Just get in touch with us, agriskadvisors.com. Call us. Just look up an agent if you haven't already, or call the office, and we can make sure that we get you the right answers and do that for you. So.
Sounds great. Well, Tait, thanks for being here once again. Tait Berlier, Alex Anaya, that's who I am with AgRisk Advisors, guys. Listen to the podcast. Reach out to us on social media, Facebook, Instagram. I believe we even have a Twitter. We're up in the game here. Visit our website. All of our links to everything is there. So if you guys have any questions, whether it's on BFR, VFR, it's any of the programs that you've heard us talk about, come and work with an AgRisk advisor, and we're going to make sure we treat you like family, get you the risk management techniques and programs that you absolutely need, and we're going to work with you and help you guys out every step of the way. So thanks for tuning in today. Tait, hope you don't have too long of a drive home today, but I'm getting out of here, so I'll talk to you later, buddy.
Thanks, Alex.